What's up guys, welcome back to InvestingPH. For June, my portfolio's total value has now reached 2.1 million. This is with a total return of 11.76% or 224,531. This is by far the highest my portfolio has been ever since I started investing in July 2019 with only 70,100, and my portfolio's value then was only 68,662. I slowly crawled my way, adding a great portion of my income to my portfolio. There are months when I invested a lot, and there are times like the pandemic wherein I had no job, which I wasn't able to invest any at all. My portfolio reached the million mark in September 2021, which is 2 years and 2 months. Then I just continued the process, reaching my second million in just 1 year and 9 months. So it's true that your second million would come faster. Although this is because of capital gains and dividends, actually mostly dividends, that I got my second million because my invested capital is only 1,909,800 as of the end of June. My returns this year come mostly from these stocks. First is Aboitiz Power, having an 18.1% year return, and if we include dividends, it will go up to 24.2%. Next up is Costco, giving me 20.8% year return, and if we include dividends, 25.8%. Third, MPI went up 34.1%, and if we include dividends, 38.1%. Now, MPI's stock price went up due to the news that it will go private, and the tender offer has now increased to 5.2 compared to the earlier offer of only 4.63. This has led investors to buy the company in hopes of getting that quick profit once the tender offer is pushed through. As for me, if you asked me if I would accept the offer or not, I've made it clear in my previous portfolio update I would accept the offer as I have nothing to lose. I bought MPI at an average price of 3.71 pesos per share. If I accept the tender offer, it would give me a 40.16% capital return. This does not include the dividends I got from the company. If I include that, my returns would range from somewhere between 48 to 55% return for the past 3.5 years I've held the stock, giving about roughly 13 to 15% average return per year. That's why this is the importance of having a guide when buying stocks. Since I analyze the companies before I buy them and compute my intrinsic value, I see to it I buy the stock when it is at a discount. Although this is an exact science, it sure has helped me a lot. Another stock in my portfolio that has recently increased in share price is Shang Properties. Though this is the second smallest in my portfolio, it has given me a lot of dividends. It is up 21.2% in a year, and if we include dividends, it is up 33%. This is how my portfolio has stayed on the positive side even though our market is still a lagger. Year on year, we are only breaking even, and if you look at a 5-year range, we are down big, about negative 20.29%. For my new viewers, I include as well FM ETF. This is a fund that tracks a PSCI, which is readily available in every broker. For that fund, it is down 15.52% from the day I started investing. The returns are higher compared to the PSCI since this fund also accounts for dividends reinvested. Now before we head on further, if you're wondering where I got this data I'm showing, it is from Simply Wall Street. If you notice, I'm advertising this platform in each of my videos because it is what I use every day. It has helped me tremendously in my investing journey, and I want to share this amazing platform with you guys. I never share with my viewers what I don't use just for the sake of money. Simply Wall Street has tons of data available for you, and the way they present it is so clear and easy to understand. They give graphs, comparisons, and explanations wherein a beginner investor can understand. They also give you updates on the stocks in your watch list from earnings release, dividends, insider buying or selling, and when the stock falls below your computed buy price. And speaking of buy price, they also have a computation for you. The best part of it is they have 2 ways they computed it, from discounted cash flow or from analysts themselves. So if you don't know how to compute it, this will definitely help you out. But a warning, only use this as a guide. You still have to do your research well to identify if the stock is really undervalued or not. And there's more. They also have a portfolio tracker that lets you assess the health of your portfolio. So if you want to try it out, they offer their basic plan forever free. And if you do sign up using my link, you get a 14-day free trial of all their platform's features. Not only that, if you avail of their paid plan using my link, you can get up to 40% discount. So what are you waiting for? Try out Simply Wall Street. Now back to the video. Some have asked me why I stick to investing in the Philippine market, even though our market is a laggard compared to other countries' stock markets, like the USA, which has definitely soared high after the pandemic. You see, this is one of the mistakes a lot of investors make. They want to go in when the market is high, but making money isn't when the market is high, it is when the market is at its lowest, because that is the time where you can buy a lot of companies at huge discount. And the best thing about buying stocks at a low price is they give good dividends, because when a company's stock price goes down, most of the time it isn't connected to its fundamentals. Heck, a lot of companies in the Philippines have already exceeded their pre-pandemic earnings, but their stock price didn't even move an inch. With this, companies pay the same amount of dividends as when their stock price was high. Some even increased their payout, giving a much larger yield. If you scan through the PSE market, you wouldn't have a hard time finding companies that have a 4% or higher yield. And this isn't just companies that have good yield, but also have good financials, which you wouldn't see when the market is at an all-time high. So for a long-term dividend value investor like me, I like it when the stocks in my portfolio are in the red, because I can buy more of it at a cheaper price and I get better dividends. From a short-term perspective, it isn't beneficial since I'm in the red, but for a long-term perspective, it is more beneficial as I get to invest more money at a good price, and when the stock market does rise again, the more money I get. And as I've said over and over again, I'm in it for the long run. I don't have plans to sell my stocks in about 5 or 10 years. If I can, I would hold it forever to get the most of that compounding effect. The stock market isn't a one-day millionaire scheme. It takes time for compounding to work. And so far, I can see my progress, and I've shared this with you guys every month. I started my monthly portfolio update when my portfolio was only 700,000, which was in March 2021, wherein I ended that year with 43,000 worth of dividends. This is from 2020 with only 8,700, and 2019 161 pesos. But as I go on, consistently investing month after month, my dividends started to increase. In 2022, 81,259, and for 2023, I already have 61,645, and there's still more to come this year. My projected dividends at year-end is 110,000, but so far, my trailing 12 months yield is 117,745, giving me an average monthly income of 9,812. This is from June 2022 to June 2023. You can see there are months I'm earning 14,000, and the highest was in March 2023 of 17,977. By the way, everything I'm showing is already after taxes. This is me doing nothing and earning this amount. It's like earning an SSS pension or owning a small rental studio condominium without the hassle of maintenance or finding a tenant. And the best part about this, it's so easy to reinvest the money and let it earn more money for me. Actually, what I do when I receive dividends, I reinvest it in the cheapest company on my watch list that will still give dividends this year, so let it earn more dividends in the same year. Just imagine this 117,000 if I reinvest in a company that gives 4% dividends will now be earning me 4,680 pesos more. This is the power of snowballing dividends, and this is how I've increased my dividends at an exponential rate for the past 4 years. Just imagine how much dividends I'd be earning 10 years from now. If I was able to get almost 10,000 a month of dividends in just 4 years, what more 10 years from now wherein my dividends have already snowballed? That's why for me, this is the best part of stock investing. Now moving to the stocks I bought this month. As I've shown in last month's portfolio update, I was looking at buying All Homes, a retail company, so I bought a lot of it in June, pushing it up as the 4th smallest percentage in my portfolio, and I also bought DNL when it went below 6.90 and added more to MREIT and Megaworld. The best thing about these purchases, these companies would still pay dividends this year. I'm hoping that my dividends would get me to an average monthly income of 10,000 a month, which previously I mentioned was my goal before I reached 30 years old. I never would have expected that I would come close to it this year. So these are all the stocks I own. Globe has the largest share of 12%, followed up by LTG at 10%, Megaworld 9%, DDMPR, MREIT, AUB, and DNL tied to 6%, and Aboitiz Power and FLI at 5%, the rest lower than 4%. If we group by sector, holding companies take the lead with 24%, followed up by real estate and banks tied to 15%, REITs 12%, tech, which is solely Globe, 12%, energy 8%, and the rest lower than 5%. I'm happy that I get to add more to the retail sector because of the addition of All Homes to my portfolio, and it has good dividends since its stock price has plummeted hard from its IPO. With that, this ends my monthly update. If you have any questions, do leave a comment down below, and if you've learned something from this video, and still haven't clicked the like button, then do so before leaving. It really helps out a lot. Let us reach out to more Filipino investors to increase the very low percentage of investors here in our country. Thank you and see you in the next video.